familiar with the US dollar. The US dollar is a reserve currency much because of the petrodollar. And with Bitcoin, it's a reserve currency for cryptocurrencies, just as the US dollar is a reserve currency for altcoins. So people who acquire, US dollar is a reserve currency for fiat currencies, just as Bitcoin is a reserve currency for altcoins, mainly because a majority of people who acquire the altcoins, they do so by using Bitcoin as a proxy. And most of the altcoins, they derive their value through the exchangeability of Bitcoin. But not just Bitcoin, the Ethereum as well is gaining popularity as its price has been exploding, and you're able to exchange altcoins for the Ethereum coin as well. Now, Bitcoin's both a digital currency and an open payment network. So think of if PayPal were to create a PayPal coin, or if they had a PayPal coin before there was a Bitcoin. In essence, that would be the same thing. Bitcoin would be, PayPal would be the same thing as Bitcoin if it were to come out with a PayPal coin. So it's a payment network within which the currency is transferred. So it's a distributed open source ledger or payment system that is still in beta, and it's in beta, but it works. Beta meaning that it is still improving and being developed to be enhanced. We saw that with the recent fork and Bitcoin Cash coming out, as well as the Bitcoin 2X. But the goal of blockchain system, and those are nothing more than altcoins, by the way. But the goal of blockchain system is to enable people to break free from the walled gardens of financial networks, credit cards, i.e. the banks and PayPal, the one we just named, and the fees and different delays that we see in dealing with a lot of the banks as it stands. So how is a Bitcoin transaction processed? I know a lot of you, this is probably the biggest challenge or the biggest mystery to you, shall I say, is understanding how a Bitcoin transaction is processed. So this starts and initiates with the payer. The payer initiates a Bitcoin payment by using a third-party wallet software. Okay, it could be anything like Exodus or your exchange, and then at this point, this and other pending transactions are broadcast on a global Bitcoin network. After that, every 10 minutes or so, the specialized computers on the network, they're known as miners. They collect a few hundred transactions in a block. All right, this is why it's called a blockchain. Next, the miners process the block, reaching a consensus with the new blockchain, which should look something like this. This here. So from there, you can see the miners are rewarded newly minted Bitcoin for providing vast amounts of computing power, giving the stake and the smooth functioning of the currency, as well as disseminating the new blockchain to the entire network and recording transactions in the latest block. From there, you, the payee, can use the wallet software to see whether the Bitcoin's arrived. Once it's arrived, you can spend the Bitcoin. You can send, spend, or lend, as I like to say. Okay. Now, as you'll see on the next slide, a second here, I break down, I guess, the whole process of how blockchain works. I'm not going to go through the whole process as a whole. I'm pretty sure some of you guys are snipping the slide. Go ahead and take a picture of the slide. You can see exactly how blockchain works along with your keys. But here's the thing I'd like to kind of say to sum up, blockchain is, it's just like a car. A lot of you use some kind of form of locomotive to get around. And whether it's a plane, train, a motorcycle, most of you, unless you're a mechanic, you don't really know exactly how the inner workings of the engine or on that particular locomotive works. Same with the internet. A lot of us use the internet or even our cell phones, but we don't know what's inside behind the internet that makes it work. Or even in the phone, we don't know the mechanics inside the phone that allow us to dial and call somebody and be able to communicate with someone halfway around the world. All right. So the same thing with blockchain and Bitcoin. You don't have to understand how it works on the back end to be able to have and benefit from its use in your everyday life, and as well as make money. But you can see here, and I don't know if we can, on the slide, if it'll show it properly, but how does blockchain function like the internet? Well, payment systems today, they're where the email was in the early 80s. Every provider's they build on their own system. So the customers, they have to use different systems to be able to interact with, the different exchanges, different brokers, and different platforms. None of them integrate or work together. But with the discovery of blockchain, the market anticipates the possibility of big companies losing control over the flow of people's money, just as they lose control over the flow of information when the internet came out. So this is very important that you understand, and you can see different developments coming out, such as Visa filing a patent for blockchain-based digital asset network. Recently, not just Visa, but lots of different big behemoth and conglomerates, financial conglomerates, have been filing patents on blockchain, as we'll talk about them a little bit later on in the slide. The why blockchain, okay? Well, there's a lot of hype around blockchain. Blockchain, it's valuable not just in exchanging value through currency or cryptocurrency, but blockchain also has value in other things as well. There's a lot of different companies that are using blockchain. You can also see blockchain bring efficiency to originating, servicing, and trading financial instruments as well as other things. But we also have the privacy that comes from blockchain. Okay, the system, it may remain totally private if desirable. The key differences between public and private blockchains can be found further in the different protocols or the different things that you write into the smart contract. If we're talking about, what you're developing when you're developing a certain platform to put a certain token on. Ease, it provides an easy mechanism for you to be able to allow users to securely transfer and assess your assets between parties and facilitate an easy audit of accounts, as well as for not only you, but your clients, if you're talking about a business, as well as, your portfolio that you're managing. Flexibility is very important. And the one thing that blockchain does give is flexibility. This doesn't mean that you have to have everything public or you have to do things a certain way. You can have things pretty much tweaked to your liking. A lot of the layouts, the dashboards are tweaked to your likings. They even got this ability to change the skins. The QR codes, you can change some of the QR codes to show your specific name. But the one thing that's going to be constant is that they're all using wallets and special key codes to send and receive Bitcoin or other altcoins. Okay, so beyond Bitcoin, and let me actually put this particular slide here up. So beyond Bitcoin, blockchain is used for a multitude of different things. Blockchain, it underlies Bitcoin and enables institutions to transfer and record assets other than digital currency without an intermediary. So it's also used for remittances, diamonds, as well as other valuable high-ticket luxury items or high-end assets that need to be traded or transferred across the globe. Property titles, land records. This is something that is starting to move into the space and facilitate blockchain and public ledger. Interbank payments, as well as airline miles, accounting for certain publicly traded companies, U.S. Treasury repos, private shares, syndicated loans, as well as gold. One of the things that I think will be very big is one of the first countries that can get it right and use blockchain as well as a cryptocurrency and peg it to gold. They will see their currency be one of the big dogs on the block and kind of dethrone the dollar or take market share. But obviously, that's if they can outbeat Bitcoin first. But non-financial use cases, so digital content, document storage, you got different companies like Bitproof, Scribe, Art Plus, Chainlink, Stampery, BlockTech. There's a lot of different companies out there that are using for the digital content aspect of it. Authentication and authorization. They're starting to use blockchain for authentication and authorization, such as the Real McCoy, Degree of Trust, EverPass, Block Verify. Digital identity, which is going to be very big moving forward in the future. Uniquid, One Name, and Trusted Tone are companies that are using blockchain and discovering that blockchain can help in digital identity as well as marketplace. There's a marketplace providing premium rights and brand-based coins for different things like My Power offers the ability for you to sell your different things for online as well as services for Bitcoin and altcoin. Real estate, diamonds, gold, silver, reviews and endorsement. Blockchain's also showing in IoT, which is the Internet of Things. And the biggest thing is the financial use cases. I think the financial use cases are going to be very, very big because never have we seen in a industrial revolution a innovation that is going to affect and change the way that money is transferred or money and value changes hands. The powers that be, the Rothschilds, the Merovingians, the Schiffs, the Oppenheimers, the Rockefellers, I'll stop there. But the powers that be, they have had a stronghold on banking for a while, and blockchain is going to see this stronghold pretty much now leave their hands and be a level playing field where everyone will be able to take advantage. Now, I'd like to show you guys this particular slide here, which is a breakdown of the different case uses that you'll see inside blockchain. Okay, we've got retailing, person-to-person remittances, financial inclusions. The biggest thing is that a lot of this stuff is starting to be integrated. Obviously, the introduction of blockchain combines cryptography, my apologies, that's a tough, and distributed computing to deliver secure, direct, peer-to-peer transactions. It's instant trust, okay, without the need for a third party or a central party. At the heart, the distributed ledger of the distributed ledger. This is a tamper-proof public network hosted on a record of all consensus. So you can see that it's something that allows us to be able to transfer anything, for that matter, instantly without high fees, delays, or any third-party intervention. Now, blockchain numbers. There's 921 million cumulative VC investment in the Bitcoin and blockchain companies as of October 2015, and that number has actually grown exponentially. We've seen it jump to billions now. There are a bunch of different companies in the space. The funding in total or raised in the blockchain computer developers, 21 Inc. was actually one of the coins that did a initial crowdfunding or an ICO. They raised 121 million. And then there's 805 number of early stage Bitcoin and blockchain companies that are identified in the venture scanner. So there's a lot of different companies that are moving into the sector. And in fact, every day we're seeing new coins and new companies coming into the sector. Is actually the greatest transfer of wealth that we probably have ever seen or will ever see until something else comes in greater. But probably in our lifetime, we won't even see anything that comes close. Okay. So what is blockchain? Blockchain, I've been hearing a lot about the blockchain. Is it a block with a chain on it? No, that's not the case. Blockchain is decentralized. That means there is no one central location that can be hacked or attacked, so to speak, or shut down. It's non-government, and that's what makes it powerful. Remember these bullet points here, because these are some of the things that you want to kind of shape your focus around as far as these coins are concerned. So it's non-government. It will say blockchain technology. Yes. All right. Or some kind of smart contract. All right. ERC20 smart contract. Peer-to-peer. That means it's not bank-to-peer or broker-to-peer. It's peer-to-peer. Open source. So it's a public ledger. You can actually see everything as it's there on the public ledger. And it's also safe and secure. Okay. So because of these factors, we have instant trust in a world where there isn't any, especially in the financial sector. It's pretty much, hard to find instant trust. And this is why we have a lot of these third-party intermediaries. So as a result, you can see that Bitcoin's becoming a safe haven from hyperinflation for a lot of rich Latin Americans, as well as a lot of wealthy around the world. You have people in countries like Venezuela and Puerto Rico and many countries that are using Bitcoin as a medium of exchange, mainly because of their corrupt government and hyperinflation, which is causing their currency to be devalued. But they're calling Bitcoin the new gold. Now, hold your horses. The one thing that Bitcoin is not is gold. I'm Ringgold, so I will co-sign and back gold all the time, all day, every day, because I love gold. Gold is tangible. You can hold gold. If I have gold in my hands, there is no counterparty risk. Bitcoin, the same thing. Bitcoin can be something that I have no counterparty risk on when I'm holding it in my cold offline wallet, but you still can't physically hold the Bitcoin. Now, there have been some instances where they've made Bitcoins and physical Bitcoins, but I believe that defeats the purpose, because if I'm putting a physical coin into existence and putting the serial number or the key code on the coin, then it could easily be stolen or burned down if my house were to burn down. So Bitcoin being the new gold, I wouldn't say just that. But Venezuela default, Puerto Rico bankruptcy judge freezes bankruptcy or freezes bond payments. You got a lot of stuff going on around the world right now as it pertains to finance. I mean, there is things going on in Brazil and have been going on in Brazil for a while, but the corporate woes linger. Venezuela defaults fears are, I guess, increasing as billions rise in debt. They're eating zoo animals out there now because it's so bad, and has been bad because the government's gone corrupt. In fact, the government stopped posting the inflation numbers, mainly because things have gotten away from them as far as inflation is concerned. In China, there's been bond defaults that have been, on the rise, first ever in the history of the People's Bank of China's reign. And also too big to fail, proving tough to tackle as banks fight bail-in bonds. We heard about bailouts, but bail-ins are when the bank physically just takes the money out of your bank. Okay, you're the creditor. Bail out, you're the debitor. The bail in, you're the creditor. And I don't really like being a creditor and having a non-recourse loan where I'm not getting my money back. And again, they're freezing the bond payments. That means that the debts that they owe, they're not paying. So we've lost trust primarily. If you haven't, I know I have. And then what are we seeing in the sector, in the banking sector? As a lot of the news, I'm sure you've heard, the news has been doing as much as they can to talk down on Bitcoin. And it's kind of a shame. Glorious coin, we call it the coin. But obviously, the biggest thing is JP Morgan. Let's talk about JP Morgan. Jamie Dimon, he calls Bitcoin a fraud. He's then fined $4 billion for actual fraud over there at JP Morgan. Dimon calls Bitcoin a money laundering tool, while the Swiss authority FINMA cracks down on them for money laundering. Then in December, he recently writes that Bitcoin can replace gold. Oh man, no, we don't trust you, Chase. Okay, if you're banking with Chase, I wouldn't trust Chase. Okay, they should be chasing you for your money, as they shouldn't be trusted. But they've recently tried to file for patents on blockchain, and they've tried to file for patents 175 times, and officially have been blocked 175 times. Mainly because Bank of America has filed for the blockchains and kind of beat them to it first. So you can actually see that it is quite interesting, but no surprise that they would be filing for patents on blockchain, okay? But Bank of America, we can't trust Bank of America either. Bank of America was one of the biggest ones they were a part of, and the reason that we had the financial collapse back in 2008. So we can't trust Bank of America either. What about Wells Fargo? Can we trust Wells Fargo? No. Wells Fargo, they still face over a dozen probes tied to the fake account scandal. The fake account scandal. Ain't that something else? So anybody heard about it? For those of you that haven't heard about it, you probably still have some money with Wells Fargo. because obviously I don't think that they would be open right now if everybody really knew and understood what they were doing. But they were stealing money from people's accounts. They walked away with a lot of money, paid a little bit in fines, and the managers were put under a lot of pressure. And they say it was unbearable, but I'm sure that the people in upper management were giving rewards for stealing pennies at a time out of your bank account. And I mean, it's mainly because, think about it, when you have money with a bank, they can take money out your bank account at any time, okay? Because they control the bank. They control the bank accounts that go into the bank. They control the money that goes into those bank accounts. With blockchain, no one can go in and take the money out of your e-wallet unless they try to hack it per se, or unless you give them the key codes or send it to them. So seize my Bitcoin? Not really, right? Not really. I think not. Because why? Bitcoin has a lot of security measures that go into Bitcoin. The security measures that go into Bitcoin are some of the things that make it the most powerful. Blockchain as well. But we have two-step verification authentication. With the two-step verification authentication, you're able to actually see the email or text message come in, and when the text message comes in, from there, you type in the two-factor code and then you're logged in. If you don't have access to your cell phone or the email, no one can get into that account. So the two-factor authentication is something that the banks could do. Instead, the banks will freeze your bank account or freeze your card, blocking your ability to be able to go in and spend your money that's yours. In fact, it's a lot easier to put the money into the bank, much harder for you to take the money out of the bank. Now, give me 1 second here, you guys. So, Lagarde says ignoring cryptocurrencies may not be wise. You think? She stated earlier this year that at a conference, she said that she believes Bitcoin and cryptocurrencies will give traditional financial institutions a run for their money and eventually replace banks and financial institutions by eliminating the necessity for intermediaries and third-party service providers. So this was very, very important when she spoke. In fact, they're actually having another meeting, another G20 meeting coming up recently or very soon. But she says ignoring them may not be wise because she understands that the need for the third parties and these intermediaries is no longer a necessity. Now, I'm sure a lot of you guys are familiar with AML, anti-money laundering requirements, as well as KYC, know your customer, know your client requirements. And this is a lot of the things they put you through just to go in and open up an account. And there's no way that different jurisdictions and countries can have the same guidelines to open up accounts as they don't have the same numbers and reporting requirements. So they're going to be different amongst various jurisdictions. A lot of them, they just choose not to deal with other jurisdictions that have more red tape and regulation. So especially our jurisdiction, they tend to block us, China, and other jurisdictions out from the party. But for the most part, when you deal with Bitcoin in general, it doesn't matter whether they claim to have us blocked. All it takes is a good old email address and a VPN to be able to get access to a lot of this stuff. So there really is no way that you can, actually go in and police blockchain or restrict blockchain or regulate blockchain or Bitcoin for that matter. But Lagarde was right. The reason I say that she was right, she was spot on, because now what we're seeing is the rise of cryptocurrencies, and not just in altcoins, but just cryptocurrencies from different states. Okay, Dubai is the first nation state to issue their own cryptocurrency. And you see other countries now following suit, such as Japan, different Iranian nations following suit. But you can even see on over here to the left, they got their different banner. I pulled that thing right off of a website. I was looking up some stuff and it was an ad telling me to buy the coin. Now, I'd like to do a quick little test, just a quick one. I'd like to see with what I've showed you about blockchain so far, what would make a Dubai coin or a Japan coin, excuse my language, crap? I apologize for that, excuse my language there. Give me some. What will make it? Let's see here. Hold on. Let's see if I got it. I don't think some of you guys know yet, huh? Yeah, okay. Controlled by government. Okay. Government involved. That means it's not decentralized, right? Right? Not decentralized. Sure as heck ain't non-government. Right? Dubai isn't the capital city of the world. You got it, Eric. No, it isn't. Last time I checked. And Private says, yes, that's correct. Oh my goodness. Institutions. Yes, that's correct. Yes, that is correct. Not decentralized. What about Japan? Maybe Japan? No, not at all. Now they're supposed to be coming out with a Fed coin. Man, Fed coin, that cracks me up. I see some of my fellow students in here from the blast from the past. We're about to jumpstart 2018. It's going to be a good year. So let's talk about this transfer of wealth that we're seeing. And a lot of us are holding some form of fiat, okay? So what is this transfer of wealth we're seeing, okay? Net foreign assets of U.S. treasuries by official institutions officially have been seeing a serious decline. It started, you guys. Foreign institutions and governments are now dumping treasuries. And let me give you a little bit of layman's. That means they're selling U.S. dollars and long Bitcoin. Sanctions drive Bitcoin appetite. As we should all have a Bitcoin appetite. North Korea dodging sanctions with a secret Bitcoin stash. Now, I'm sure a lot of you are familiar with SWIFT. SWIFT is the payment processing system or a payment network. SWIFT, my bad. I'm over here thinking of my Swiss bank account. SWIFT allows nations to send and receive money on the SWIFT network. And the IMF, as well as the US monetary system, what they would primarily do is block any nations that would not play ball from using the SWIFT network. And a lot of the Iranian nations developed Sucre to be able to, send and receive money, but there isn't that much liquidity in that pool, as not that many people use those currencies because they're not that prevalent in international trade. But SWIFT, yes, SWIFT is very liquid. Bitcoin is becoming a rival. Biggest reason that Bitcoin won't go anywhere and will be around forever and a day, as long as there is a need to exchange value, is because it allows you to transfer value without a third-party intervention, almost for a fraction of the cost that you pay in our current market. Right now, the current market cap is 614 billion. I had to say the because some of you probably would have heard and misheard and thought I said million. 614 billion. Yes. Bitcoin, it's about 316 billion of that. Altcoins, 297 billion. So Bitcoin has a 51% dominance in the sector, but Bitcoin's a lot bigger than a lot of stocks that we're seeing. in the marketplace. I believe that Bitcoin's market cap almost at one point last week reached as high as JP Morgan's. So how tokenization is putting real world assets on blockchains. Assets will be tokenized and it will change finance. What is tokenization? Tokenization is the process of converting rights to an asset into a digital token on a blockchain. There is a great interest by financial intermediaries. Okay. Yes. Whoever asked 2,983%, that was one trade that I've been building. But think of the one trade is a trade where I scale in. That means I'm adding on a position. We'll talk about it a little later though. So assets will be tokenized. So a lot of the ICOs and token offerings that you're seeing that are coming out are mainly because there is not as much red tape or boundaries or restrictions to be able to solicit to investors when you're talking about moving to a blockchain structure or platform, as well as the full transparency and a ledger of all accounting of what goes in and what goes out and to whom it went to. Okay. Now, one of the things that I find, very funny, I find it hilarious. I like to say that one more time, hilarious, is how they talk about all this regulation, right? All this regulation. Bitcoin regulation. One of the things that was said a while back, and this was in 2014, please don't think that Bitcoin has changed. A lot of the hoopla about the fork was propaganda, and it just birthed altcoins. But the fork can't change something that is already done. It's a protocol that was written. It's done. Finito. Put a fork in it. It's almost like a virus. If I take a virus and I release the virus, I can't do anything about it. It's gone. It's released. I'm the person who created it. I can't control it anymore. So Satoshi Nakamoto, the person who created, or the group that created it, or the moniker that created Bitcoin, once he released it to the open source, we lost our ability to be able to control or change Bitcoin. So you can regulate this thing, which is good for us, baby. And as you see, I was right, VPS cloud server, VPN. It's funny, this adds there because this is the gateway. This is the way out. Oh man, regulating the coin. So next up, let's talk about fake news, a little bit of fake news, propaganda, because you know that